one of the things that may become evident as you look at our sort of title, the original title of the track was Security Through Compliance, and we don't necessarily believe that that's the case. We believe it's compliance through security, and I'll sort of walk through why that's the case, because the lowest common denominator within anybody's infrastructure or organization is the process, the procedure, and the infrastructure you have in place today. You have any number of highly intelligent IT professionals that understand security. They have items in place to deal with particular assets or issues, and those really, as a baseline, as a starting point, can be mapped up to any mirrored number or aspects of compliancy. And so we'll sort of walk through that thought process, and hopefully you'll walk away today with some nuggets that you can take back to the organizations that you're dealing with on a tactical day-to-day basis. So let's see if that's not the case. Excellent. So what are some of the compliancy challenges? Obviously, multiple regulations is first and foremost. If you think of some of the issues associated with this, increasing regulations from an organization or a governance perspective is increasing daily. This isn't a situation where you've got a set of issues or a list of issues related to compliancy and you can map yourself to that compliancy and then move on. Compliancy is becoming a process, and what I mean by that is that on a day-to-day basis you're getting new and more challenging compliancy rules and regulations, and the compliancy rules and regulations as they stand today change on a daily basis. A good example for those that are located local, which will become a challenge for even organizations outside of sort of Massachusetts, is a new rule and regulation called 201 CMR 17. Which well, you know what? I'm not part of Massachusetts. I'm from New Hampshire, so I'm absolutely with you on the point there. So you can thank the government of Massachusetts for a new law called CMR 17 under the subsection law of 201. And essentially what that talks about is the securing of privacy data. And a privacy data to them means first name and last name and any combination of account names, account numbers, personal identification numbers, addresses, social security numbers, anything associated with that. If you do business inside of Massachusetts or if you do business with residents of Massachusetts, you are subject to the law as it's stated in 201 CMR 17. Now this, sounds a little arduous, but the reality is if you start with a base associated with compliance, it's fairly easy to map into it. For instance, CMR 17 is based on Gramm-Leach-Bliley. So if any of you are affected by Gramm-Leach-Bliley or understand Gramm-Leach-Bliley or deal with Gramm-Leach-Bliley on any type of level, then by default you're going to find yourself fairly familiar and capable of dealing with CMR 17. Having said that, it's very fluid. And what I mean by that, if you look at the law and if you look at any of the regulations, most of them are fluid except for a base of, say, PCI, in that they're subject to a massive amount of interpretation. So there is two sections within CMR 17 that are applicable, 03 and 04, and both of those are very high-level statements of which can be interpreted any way the Attorney General so chooses, and how you apply to that really becomes the task. And so the challenge, back to the multiple regulations, is it really ends up in unpredictable expenses. And what I mean by that is if you go through any number of audits on any given Sunday and you're managing your infrastructure to compliance, and compliancy continues to change, you're sort of causing a multiple spin within the IT organization or within a process and procedure that you may normally do on a day-to-day basis anyway. It also challenges the day-to-day focus on security. Being compliant doesn't mean you're secure. And if you take away anything from this presentation, you should take that away. The regulations are really steering and guidance from a governmental organization, whoever that governing organization may be. Those pieces may or may not affect controls or security controls that you have in place today. But you can certainly, on the flip side, map every control that you have in security to any mirrored number of aspects of compliancy to quickly identify gaps. And we're going to go through an exercise similar to that as part of this. Need to prove compliance or sell to the external auditors. We go through a number of situations where we're assisting clients with assessments, and we are on the other side of the assessment. There's an auditor that's actually coming in and auditing an organization. We'll actually have to physically get on a phone and explain to the auditor an organization is in fact compliant. So one of the good examples, and I'm sure Bill could actually attest to this, is he was just on a phone call with one of our clients who had just gone through a PCI audit. PCI auditor told the client unequivocally that he had to enable DNSSEC, which is basically a new type of way of securing DNS, domain name services. The reality is the company doesn't need to do that to comply with the law. And if he did do that, he would go through a massive amount of non-standard implementations within his organization, which would cause a massive amount of issues associated with the infrastructure on an ongoing basis. So you have to be careful in being able to position the organization as being in compliant. In other words, you become a salesman for the organization and being able to map and understand the issues associated with compliancy and explain to an auditor why in fact the organization is in compliant for any number of areas that they go through on an ongoing basis. There's a continuing business complexity with multiple rules and regulations, each with its own compliance methodology. We'll sort of talk about that a little more in detail. You need to monitor controls to ensure ongoing compliance. Initially, when compliance hit the market many moons ago, it was enough to be able to show an auditor that you had a process and procedure and that there was an IT organization that dealt with security. And you could do it at any point in time. In other words, if you went through an audit and you had a piece of paper that said, I was compliant as of this date or a point in time, that was fine from an assessment perspective. Now, these rules and regulations are basically explaining that you have to prove to an auditor that you've monitored, managed, and maintained that compliancy over the course of the last months or a time period. And so they're going to look for areas inside the assessment of the audit that basically explain that you have actually been monitoring and managing and maintaining compliancy over the course of a time period. So basically having the documentation and the infrastructure in place to be able to output that information on an ongoing basis is highly important as it relates to any compliancy measure. So multiple methodologies with multiple mandates. What are we talking about here? There's any number of frameworks on the market space that you can take and apply to your organization, whether it be electronic in IT world or whether it's process from a human perspective. ITIL, COBIT, ISO 27001, NIST, ITSM. There are new ones hitting the street pretty much on a monthly basis today. The problem is a lot of organizations take these and try to force fit them into their infrastructure because they believe that following the framework is going to assist with compliancy on an ongoing basis. And that causes a major kind of churn within the organization. The reason I say that is because your employees today are doing something, some sort of process. They're following